Good morning. This is Mayor Valensky with Driving Markets. So the markets continue to fall, a follow-on from Wednesday's post-rate decision statement by Jerome Powell, head of the FOMC, the Federal Open Market Committee. Head of the Fed stated clearly that inflation is sticky, which means it's not going down. Markets continue falling. Look at the 10-year yield on the UST note. I've been saying already for months that the US Treasury note, the 10-year, is going to 4.5%. Lo and behold, 4.48, which is close enough to 4.5. And now I think it's going to go to 4.65% as fears of inflation and rate rises resurface back in the US. And Jerome Powell and the Fed are now in a dilemma. If they raise rates too high, they're going to cause a hard landing. They're going to cause more hardship to the homeowners and to the business owners or the small business owners. Look at the tech sector. The tech sector is hypersensitive to interest rates. So as 10-year yields rise, and last week, 2 weeks ago, I said that the impact of the yields doesn't seem to be affecting the tech sector, which is unusual, and now it's come home to roost. What's happening is that the yields are indicating rates are going to go higher. It's costing all those tech companies which are dependent on money and cash flow, it's going to cost them more money to fund their operations, and therefore rates are super high, and the tech sector, the Nasdaq, is going down. It's already come down a reasonable amount, not yet enough. I think there's probably another 5% to go near term, okay, until the end of September. So what's likely to happen is you're going to have the tech sector, the Amazons, the Netflix, the Metas, the Googles, the Apples, and Teslas are going to be further trodden on. I did call Tesla down to $240 a share, and it's come down to around about $244. I'm calling Apple down to $150. Obviously, everything is in my opinion. As one viewer said, don't call it exactly down, give it a range. I said, okay, no problem. I'm calling Apple down between $240 and $255. That's a broad enough range. I'm calling Tesla down between $230 and $245. But it's already at $244, so it's already within that range. Other factors. Why do I focus on those top companies? Because they form 55% of the Nasdaq. Whatever they do, they push the Nasdaq in that particular direction. The other members of the Nasdaq or the other participants in the Nasdaq are nowhere near as big as those companies. Apple has competition from Huawei, which now has, or Huawei, Hawaii 5.0, whichever name you want to give it, the Chinese telecommunications company. They now have got 5G capabilities, which is now going to compete with Apple. So Apple is on the way down. You can't stop Huawei, that's for sure. Going forward, you're going to expect more volatility in markets. I expect markets to continue trickling down, sell into any rally, expect bonds to go up to 4.65 as stated. Other factors to look at, Societ Generale came out with a profits warning and has begun to cut expenses and lay off staff. Societ Generale is one of the top 5 or top 3 biggest banks in France. The other bank that's in serious trouble is Bank Paribas, BNP Paribas. They are in serious trouble. Over in Germany, Deutsche Bank is in huge trouble. There's more debt than the whole German government together. They're in trouble. And then you've got in the US, you've got the regional banks. All of them are in trouble. So we're going to be entering a major banking global crisis, not just in the US, also in Europe. Will it trickle over to the UK? Don't know. Good question. We'll have to watch out for that one as we go forward. That's more or less it. You've got some inflation numbers out on Friday in the US, personal consumption expenditure. That is the most favored inflation measure of the Fed. So that's one to keep an eye on. But as inflation trickles up, yields will rise and there'll be more pressure on the central banks to raise rates. This is Mayor Valensky with Driving Markets. You can share, subscribe, follow, comment. Catch you later.